In a world where rates could not be non-zero, which they are now, the more important thing is to understand the technical trend. And you have had governments spending trillions of dollars to create these two boundary conditions for you. You need to understand them and take advantage of it. You will make trillions distributed across all of you. That is where to spend your time. That is where I will spend my time. That is what my spidey senses tell me is the greatest opportunity of my investing career. And I've never felt this way before. I didn't even feel this way about Bitcoin. And I was the guy that owned 5% of these things in 2011. My dollar cost average was like $90 or $100. Even when I knew that that was going to win, I'm telling you that that is going to pale in comparison to this.
Chamath Palihapitiya is well known for his philosophical ideas and Twitter rants. The tech billionaire of Silicon Valley speaks regularly about wealth inequality, social justice, and lack of diversity in STEM fields on the podcast he co-hosts, The All-In. According to Chamath, we had a decade plus of zero interest rates, and that is what was fundamentally wrong. It perverted the market. It distorted reality. It allowed manias and asset bubbles to build in every single part of the economy. Low interest rates mean lower returns on savings accounts, which can encourage more spending in the economy, which can be a boon for high-growth assets. Palihapitiya said free money given by the central bank resulted in a misallocation of risk, which led many people to misprice the risk of their investments. Looking ahead, the natural next question is, as the Fed continues to raise and likely sustains higher rates over the coming years, will there be platform-level leaps of bits and atoms that coincide with the new interest rate regime? Chamath answers these questions in the video, as you would see shortly. He also talks about the technological era and why it is the golden chicken that lays golden eggs for entrepreneurs and investors. According to him, despite there being many winners and losers over the course of more than 6 decades, we can identify a clear pattern that led to the formation of each cohort of technology companies. Major technology breakthroughs can act as platforms for new companies and business models. He also advises company owners, brewing tech enthusiasts, entrepreneurs, investors, and people who are looking for a way forward in the rapidly changing economy. We will now go into the video and listen to Chamath as he talks about his macro view and the way forward. Don't forget to like and subscribe to the channel, and also ensure to leave your comments when necessary. Enjoy the video.
The biggest thing that's happened in the world today that has caused all of this upheaval that you see has been central banks moving to zero interest rates. Let me just explain this for a moment. If you looked back in the world in the 60s and 70s and 80s, you had incredible coordination. So if there was a big problem, even starting in World War II actually, you had huge problems. You had to invent incredible technologies. There was this cooperation, and it was largely led by governments first. And then all of these other organizations would fall out from beneath it. But that was in a world where the economy was basically one where there were checks and balances, and capitalism was allowed to play itself out. Right? There were winners and there were losers, and we did not shy away from it because that was politically incorrect. Today, that's not true. You are not allowed to have losers. Everybody has to be a winner. Everybody gets to touch the soccer ball. Everybody gets to score a goal. No company should ever go out of business. Every theoretical sector of the economy could be subject to a bailout. And all of that was made possible because when we broke the glass in 2008, in this great financial crisis, we took rates to zero, and instead of taking it back, we abandoned it. And so we stopped cooperating. But what's interesting about that is that that was the same time that technology companies just completely transcended every other company. Because it was a thing where you could still have truth. You cannot hide from the fact that Tesla is a better car. You cannot hide from what an iPhone is. Does anybody know the difference between airline A versus airline B? I'm sure you could give me a very complicated balance sheet example, but there are no differences. Pick a CPG company, pick an insurance company, pick a bank. These are all sort of like monolithically the same. Tech companies are not. They are unique. Every single one is unique. Some are winners, some are losers, and it's very clear where the winners are and where the losers are. So what I would basically say is nonprofits and government used to be a very productive way of moving things forward. It doesn't work today in a world of at or near zero rates, or in this world today, the hangover of that. You have to go work in a technology company, and you have to use technology to build a business, because there is no problem that you cannot solve that technology won't be the leading edge of the sword. And by doing it, it's impossible to not make money. I dare you to find a technology business that has improved the world that has not made millionaires and centimillionaires and decamillionaires and billionaires. It's just not possible. So, if you want to be socially progressive and do something interesting, you have to embrace capitalism and you have to embrace technology and you have to do something. If you want to really figure it out, I'll give you 2 big trails of breadcrumbs that you should follow. And I've said this now a little bit redundantly, but I'll just keep saying it because it is the most important thing in the next 25 years. So I don't care what you like or don't like. You need to pivot your career to one of these 2 things if you want to be successful. Number 1 is that the marginal cost of energy generation is going to 0. Okay? You have wars, you have death, you have all kinds of geopolitics that pivot around natural resources and energy. What happens to a peace dividend in the world when you don't have to fight for that stuff because you have abundant energy? And the cost of making that energy is effectively 0 and it has no impact into the ecology of the world. Well, we're about to find that out. And when you take the cost of energy to 0, now it unlocks all kinds of other problems that before were impossible to tackle because it would be too expensive. So that's trend number 1. Trend number 2 is that we have shifted the ability to calculate and solve any computational problem away from a CPU to these things called GPUs and ASICs and FPGAs. That's all fancy language for things are getting easier and easier to solve. Okay, there's a company in Silicon Valley called OpenAI. You may have played with their tools called Wall-E or GPT-3, or DALL-E, sorry, and GPT-3. What are these things? These things are massive leaps in AI. Okay, these are models where you can type in something like, and one of you guys should do it now. We can throw it up here, like, Wharton class of geniuses in the Renaissance style. Those are just words, and they'll translate it into an image. It's incredible, incredible technology. Okay, or GPT-3, where you can have a language model now where it can auto-write a book, and you will not know that it was not a human.
Chamath gives a description of the market, comparing it to a train moving up and down a hill. He also talks about the discount rates and interest rates and how it affects companies and startups. Let us listen as we continue with the video.
Think of the market as a train. And sometimes the train is going up a hill, sometimes the train is going down a hill, and sometimes the train is going off of a cliff. But it's important to observe how the boxcars are arranged. The boxcar at the front are these computer trading algos, okay? And those algos really dictate the early momentum and shape of markets and vol and how things move. Then the next are the hard money long onlys and hedge funds, like us humans that are running money. And then at the back of the train is retail. And I'm just kind of like giving you the 3 basics, high-level summary. And if you look over and over repeatedly over time, if you follow CTAs and then you follow the positioning of hedge funds, you can sort of see where markets go. And if you take that set of information and you marry it, so you do a join with where the volatility index is, you get a decent directional sense of what's going to happen. Again, this is not advice. This is just like, go and do this research for yourself. Right. I think that people don't understand that a lot of these behaviors were levered to 0 interest rates. So if now interest rates are 4 or 5 or 6%, the most important thing as a business leader you should understand is what the implications to your business are. And so, look, I don't know if you saw Google's earnings today. They did a horrible job. And part of it, though, was that they actually released a chart which showed that they had hired an incremental 36,000 people to do such a horrible job. And so they're going to be under a lot of pressure. My friend Brad Gerstner put out a letter to Facebook basically asking them to cut 20% of their staff. It's really important to be financially numerate. And so if you're a good manager of a business and you actually understand that the discount rate actually affects your terminal valuation, which means that there's certain things you can spend on, certain things you can't, and that growing at 50% is actually better than growing at 150% if that 150% growth is unprofitable. Nobody ever thought that that was true. But it's because we never had a rate environment that forced us to learn these lessons. So I think learning these very simple things and just being honest. I find that telling employees, There's been a regime change. Here's a new world order. They're smart. They get it. It's like of course, in your family, I'm sure there was a moment where you tried to manipulate your mom for more ice cream. You know what I mean? If you can get away with it, kids do that. Not dissimilarly, I think that employees were able to get away with a lot of excess that was fed by executives in a world where rates were zero and money was infinitely available. And so now we just have to belt tighten. But I think I would learn that lesson very importantly.
Interest rates are cut both ways. While startup creation is directly proportional to the availability of risk capital, free money can be a headwind for sustained success. Instead of concentrating financial resources on a few promising ventures, it can have the tendency to spread capital and talent too thinly over a broader set of companies. As a result, during low-rate environments, we find that competition thrives, talent gets diluted, and input costs like labor and advertising go up while the individual probability of any company succeeding goes down. At the same time, the market becomes too quick to reward $1 of revenue growth with several more dollars of incremental enterprise value. In turn, companies are mistakenly given a clear incentive: grow at any cost. The unfortunate outcome is that this promotes unsustainable growth models, which, as we are experiencing now, are extremely difficult to snap out of, particularly when regimes like interest rates change. According to Chamath, with the marginal cost of energy going to zero and the marginal cost of computing also going to zero, we are going to be seeing a massive wave of new trends. With these two trends put together, there is seemingly no challenge too expensive or too complex to solve. We are already beginning to see the green shoots, but the universe will grow exponentially as scale, costs, and access continue to improve. Finally, it's important to remember that boundary conditions should always exist when making risky startup investments. But if the trifecta of boundary conditions are met, a new bit platform, a new atom platform, and sustained above-average rates, history has shown it to be a very lucrative period for both investors and founders. Let us know what you think about the video. Feel free to drop your comments and also ensure to like, subscribe, and turn on post notifications. Thanks for watching.